Welcome to Sunday session for January 15, 2023, man. Amazing week coming off of, CPI numbers. You just had a nice move. But let's get straight to it, man. 1 week chart going for FinViz. We always like to start off on FinViz, seeing how it looked. You see a 14% out of Amazon on the week. Microsoft got that 6%. JP Morgan and the banks had their earnings on Friday. They went up 4% on the week. It's definitely a lot we could talk about. Some of the slower movers, Walmart, you see Target's kind of creeping up a little bit. Healthcare sector, MRK kind of moving up a little bit. ABBV all the way down to 153. They pay a high number of dividends. They may have a recovery coming up soon. But overall, we got to prepare for this week, guys. We got earnings dates. Netflix is January 19th. That's probably gonna be one of the biggest ones coming up this week. I think a lot of people got their eye on that one. We got Tesla on the 25th. That's gonna be another high watch coming up soon too. But we know that last week of this month is gonna be huge for earnings, guys. So let's prepare accordingly. Let's not get greedy. Collect that check and keep on moving. There's no reason to linger. So first thing first, man, we got a nice list of stocks we're going into this week. Of course, we want to start off with Netflix. SPY. I always start off with SPY, man. Let's start off with that nice SPY chart on the 1 week. We got to respect the downtrend on the 1 week. We're still breaking down. So we're just going to, keep that in the back of your mind that downtrend is still intact. So when you're coming into your planning, go to every time frame to see what they're doing, right? So we're still on downtrend time. We haven't really touched that line yet. My ideal is to go up to 402. And then once you go to the 4-hour chart, you're going to see why. So boom, SPY did close above the resistance on the 4-hour. So we should be targeting that 402. And then above that, we should be targeting the 405 area. But either way it go, once we hit the top of this trend line, we're going to have an idea of doing puts, not just immediately, but on the retest, because there's a possibility that we break above this slightly and we're going to come back down. So please watch out for this trend line when you're still playing it with caution. So I'm looking at a 410 call and also a put for 390. So keep that in the back of your mind. End of the month is coming around. Things going to slow up going towards earnings. We may start seeing some consolidations, but to collect the check this week, we're looking for an entry for the calls, right? So once we, first thing in the morning, if they give us an opportunity, we can probably trade the call right up to the 402. And then we're going to bounce off of that and do the put all the way back down and catch that downside. So pay attention to that. It may be quick. It may be at 402, or it may be at that trend line around 405-ish. You feel what I'm saying? 408, 405. So please keep that in the back of your mind. Do not miss out on that downside. You know it's coming. We already know the beginning of the year always shows us the same things every time. Tech stocks do not move really big in the beginning of the year, and sometimes they struggle in their earnings. So please pay attention. We're trying to catch the run up before earnings, and then if there's a possibility of a downside, we're going to catch that also. So if we get a big spike next week out of all these tech stocks or the week of their earnings, SPY have a big spike, we're just going to look at the RSI, catch that downside, and run it down to about 390. Buy yourself a little bit of time if you possibly can afford it. But we're going to definitely try to catch that downside back to the 390 area. So please pay attention with SPY. But short and sweet on SPY, man. I really like what happened last week after seeing that consolidation, then that breakover. So I'm definitely excited to see if we have that small area continuation. There's going to be a small window of opportunity. So we're going to have to pay attention to what happens first thing in the morning. Right? So we know futures is up around 6:30, 7 o'clock today. We may see a gap up. So that's also an indicator of a gap need to be filled on the way down. So we can look at that 390 as a confirmation for either way. But please pay attention to what happens first thing in the morning. Don't be in a rush. We're just going to take our time and trade accordingly to the plan and keep it moving from there for sure. Netflix got earnings coming up on the 19th. Now, Netflix already been on a tear. I think we talked about it at the end of last year. July bottom was about 175. Now, you can see kind of it consolidated on a weekly time frame, this is why, you know, we have to start noticing some of these consolidations on big time frames, and then also consolidated here around that 230, 221, all the way up to about 250 actually, and then it broke out again and gave us another leg. So we are riding the trend line that's in place there, but we starting to look like we targeting that 200-day moving average, which is 365. So with the earnings coming up this week, we may get a push towards that 200-day moving average at 365. So please pay attention if you can afford it. Go light day of earnings, or you know, whatever. You can do a call and a put like we always do. 300 put, 370 call possibility if things don't just take off first thing in the morning, if Netflix don't get some energy on Monday and Tuesday. But if it does, we're gonna be looking at the put and the call. Same thing. If we're at 365, we're gonna go up to 380. You know what I mean, 385 just for a lotto, and then we're gonna straddle it with a put down to the $300 area. So keep in mind, 200-day moving average is the ultimate target at 364.88. And then a move beyond that day of earnings call, if you want to risk it, buy a straddle and keep that in, you know, keep that in your pocket just to see what happens, man. Because Netflix can make a big move either way. These big drop-offs, this was earnings. You know what I mean? This was some of these earning calls that Netflix had problems with back in last year. So we had the same thing that happened in April. You know what I mean? Earnings came out, had a big drop-off. So pay attention. I'm not saying it's going to do it again, but let's see. You know what I mean? Let's see. We know things, you know, looking a little fickle out here, but Netflix is still producing great content. It's still producing great content. So let's see if their subscriber numbers going up. Are they steady? It's going to be a nice guidance going towards the future. So keep that in the back of your mind. But when you trade some of these earnings, read up on some of the information, some of the articles that they release with projections. But this is my target right now is 365.82. We did close above the resistance, so we definitely could have a nice push towards 365. Amazon. I really like Amazon chart. I think Amazon should be the highest watch going into the next few weeks. Their earnings is on February 1st through the first week of February, right? So, you know, we got a good solid 2 weeks to prepare. And I'm not even gonna gas you. I'm probably gonna get a 125 call for February 17th. The RSI is extremely high on the 4-hour. It's at 80. So we may be able to see that discount. I'm trying to fix my chart so I can show you what type of downside we may have here. But let me go ahead and show you this real quick. And the reason I'm saying I'm super bullish on Amazon, because the 9-day moving average is crossing the 65 and the 200-day. So that's a sign of a bullish move. But I'm definitely, with that RSI being at 80, we're going to wait for it to slow down just a tad bit. This is kind of what we just did with Boeing. Remember I told you guys that Boeing was going to slow down, give us a little bit of downside, then reversal. It's the same idea that we're going to pull out with Amazon. So since the RSI is high, we're going to wait for it to slow down, give us that discount that we want. Might be around 92. I know that's a stretch, but you know, that's right below the 200-day moving average. But we're gonna have to wait for that confirmation below 96.23, which is the 9-day moving average. So if we break down below that 9-day moving average at 96, you may see around $92, $93. I'll jump into a 125 going toward February to try to trade that earnings move. But Amazon is looking extremely good on the 4-hour, and then when you go to the weekly, it looks better. It looks better on the weekly. So on the weekly, we definitely got a huge bullish candle breaking over the 9-day moving average. And again, my target is 123. I can't even tell you. And this is the weekly time frame. So this is why I'm saying get February calls, because the weekly time frame is bullish. So that means it's going to take a couple weeks, right? So if I give me, you know, that's basically if I get the 125 call at 192, 193-ish, it's going to give me at least 3 weeks for it to start reaching this full potential, which is going to be towards their earnings, right? Beginning of February. So I'm looking for not this week, but the week after next to get a nice move of energy off of Amazon, especially if the tech stocks do okay going to starting off this first earnings quarter. Now, I mean, so pay attention. Pay attention. This is going to be a nice move. Hopefully, I bought y'all pens and pads. Don't come here empty-handed. Like, we're not doing that. We're coming in with pens and pads. We're focused. We're locked in. Now, I mean, so please pay attention. I like Amazon to hit 123. If you like it, let me know. If you have another idea, let me know. I'm open to everything. I don't, you know, I don't shy away from information. So please let me know, guys. Apple. So now we already got our retracement area. See my box down here at the 124, 125. We already got our retracement. We may be hitting up to 138. Remember, this 138 been resistant since 2020 after the split, right? So when they, well, 2021, they split in 2020. So 2021, they split with it to 125, and then it spiked up to 138, and then dropped all the way down to about 106, 107, right? This is the same resistance from back then. So 138 is always the target of hard resistance since 2001, right? Same deal, guys. We can possibly continue to trade this all the way up towards the 137, 138 area. And then that should be close to earnings enough where you can take profit and then sit back and wait and see what happens, right? We have to be patient with your trades. You see, we already broke above the 131 resistance. We already see the 9-day and the 65-day moving average crossing. And if this is above anybody's head, please stop me and say, can you explain? You know what I mean? I know it's a lot of new people saying that the dialogue is too much and it's not difficult. I got a message, you know, Smiles telling me that. And I'm like, I understand totally. I get it. But once you hear it consistently, you're gonna pick it up. It's just like everything else we do in life. Now, I mean, we can pick up dance moves off TikTok, or we can pick up stats in football. It's the same thing. So just come in, listen, regurgitate, work on it, and you'll figure it out. But that 125 was a split price. So that was the good support area. You had a double bottom, then it broke all the way up for the retracement, and now we're above the 131. We should be targeting like 138. 200-day moving average. Okay, guys? Again, earnings is the first week of February for Apple. Microsoft is the last week of February. Last week of January. So please pay attention to these moves this week and beginning of next week. Hopefully, because of the RSIs, we've seen a lot of high RSIs. We see some nice consolidation. We can get a slowdown and get a small area of discount. If you're not in it, I always suggest to wait for it to come down to the 65-day moving average. That's around 133.87, and get a small discount before you jump into it. If you wake up first thing in the morning, not wait for the 10 o'clock rule and the first 30 minutes super volatile, and you see the big spike, you're going to kick yourself when it come back down because of the high RSI on the shorter time frame and where you could have got a discount around 10:30, 11 o'clock. So please pay attention, be patient, and always have risk management on your portfolio. Anybody got a question about Apple? I know it's one of the most popular stocks, but I'm literally just, you know, targeting 138, nothing super huge. Again, information was put out about this at 125. So this is a small continuation. AMC. I see we talk about AMC. There's nothing wrong with talking about penny stocks. I'm really trying to break that idea. I understand that options is the coolest. It makes a lot of money. But penny stocks makes a lot of money too. You know what I mean? So depending on how you want to trade, if you got a small portfolio, you may want to focus between the $5 range and the $15, $20 range. If you got a bigger portfolio, it's easier for you to float over to Apple and Amazon and get some of these more expensive contracts. But AMC does do contracts, and they're definitely at a huge discount. And we know that it's popular because it was a meme stock last year. So seeing the traction off of AMC is nothing wrong with it. So don't shy away from some of these penny stocks if you got a smaller portfolio. Now, I mean, these options can go for 30 cents, 15 cents, and move up to as much as $1. So that's money. Now, I mean, it don't matter how you cook it, it's still money. Now, I mean, AMC. I'm gonna use my moving averages this year. Last year we talked about quadrant lines. This year we're on moving average. So I'm teaching you how to use the 9, the 65, and the 200. So boom, same thing. I love to see consolidations. You can see consolidations on whatever time frame you want to see it on. This is I use the 4-hour. The 4-hour is more of a confirmation time frame for me. Whenever you see a big consolidation on that 4-hour, that next move is going to be a huge breakout, right? As soon as price break above that resistance off of the consolidation, we get a nice breakout. That's what we're seeing now. My target is $5.41, which is the same 200-day moving average. When you go down to the 15-minute chart, Let's see what it got. Boom. Here go your resistance area here. We have to break above this $5.19. And I know it seems minuscule to talk about a penny stock that's moving 20 cents here, 20 cents there. But this is money. You can get a $5.50 call. You can get a $6 call. But if this stock price break above 520, we're going to have a solid move towards the 541. And that's the 200-day moving average on the 4-hour. And then boom, there you go. You know what I mean? You can either break above there or it can break below. That's the same resistance from back in December. You see the double top. If I scroll over, here, let me show you this. Let me slide this over to you. You see the double top here, right? That's the same resistance area on the 200-day on the 4-hour that we're starting to approach now. So keep that in the back of your mind, guys. If you're trading this, wait for confirmation. Look for a break towards that first. If it don't break it the first time, it's going to more than likely come back down and then do a retest. And this is a 30-cent move. If you got thousands of dollars in the account where you can buy $5,000 worth of shares, you can literally make, you know, $200, $300, $400 off of a 20-cent move. You know what I mean? So keep that in the back of your mind. Also, it's not always about options. You can do this and trade whole shares with penny stocks. So what else we got going on? Tesla. Lou put together a nice breakdown on Tesla. I'm just gonna, you know, go through the same motions. We always usually see the same things. He's been around for 3 years, been working, you know, well for him. So we definitely using the same strategies over and over. Nothing changed. We see the resistance is the 65-day moving average for Tesla, and that is around 124. The same resistance that we've been seeing for the last 2 weeks. This is a small area of consolidation. This is why I did mention that Tesla's going to break out, because what we see, the same consolidation that we've seen on every other chart. Small area consolidation, which means, you know, we see a multiple bottom, we see a multiple top. And then now, if we break above that 190, my target, and it seems crazy, is 157. That's the 200-day moving average. Now, we've seen this happen so many times often where people be like, man, I should have. Well, the opportunity is going to show itself once we break above 124. If Tesla break over 124, I will be rushing to get at least a 140 or a 145. And I'm pushing that towards their earnings because it's the same process over and over. Their earnings is January 25th, last week of this month. I would be pushing, you know, at least February 17th as for safety measures, especially if you buy multiples. So if you can get you a February 17th, you know, 140, 150 is going to be a little bit more expensive. It's worth the risk because if the move happened the week of, and this is before earnings, and the price of the stock shoot up to 140, 150, you're in the February. You can sell partial of your options. Like if you buy 4, you can sell 3 and leave them running for earnings. And if that earnings continue and pushes up to 160, boom, you just hit your jackpot, right? The reason that you're going to sell 3 or 75% of your position way before earnings, or if you see a spike in volatility, which is usually a huge spike in volatility the week of their earnings, it's a safety tool. You're going to take 50% of it is going to be money off the table, and the 25% is going to be profit. So basically, you're going to be getting your money back and like 25% more in profit, right? But like, no, how can I gotta say that better? You're going to be getting your original investment back plus another 50% total in profit, right? It depends on how much it goes up. If it goes up 100%, well, you're definitely getting a lot more. I mean, you're probably going to get, you know, just the math is just a little complicated. I really don't want to indulge in that, but just know, sell 75% of your position if you get over 30 to 50%, and then leave around. Now, I mean, usually if it goes to 100%, you can sell 75%. You've really got just playing with the bank. You feel what I'm saying? So that's a whole nother, you know, Sunday session breaking down that type of strategy. But if you buying one, and you better sell that contract. If you're a one contract buyer, do not use that strategy. Once you get into a 40, 50%, you know, gains or 100% gains, get up out of there. Don't worry about what everybody else is doing. You know what I mean? What's up, Black bro? Oh, price target is the 158. 4-hour. 158.
158, 157.
157.92. To be exact, 158.40. That's the 200-day moving average on the 4-hour. And this is over 124. We have to break resistance at 124. Remember that. This has been a hard resistance for the last 2-3 weeks. Well, at least December 29th.
Any kind of options chain, bro?
I'll go through the option chain real quick. What expiration date you want?
February.
The February 17th is the one I've been looking at. You know what I mean?
Yeah. Because they earnings on the 2nd, ain't it?
The 25th of January.
Oh, January. It's still.
Yeah. So the 160
yeah,
call.
17th.
Yeah, so the 160 call is 171, but the 140 and 145 is $475 and $375. And you know this is Tesla. So the reason them contracts are gonna be super crazy if it gets to that range, that $300, $400 can be easily 2,000. You know what I mean? You guys know.
Yeah, but shoot, man, I usually do a spread on Tesla. It depends on how much I want to spend. I like the straight calls.
Yeah.
But it all depends on, how much you bread. But yeah, a spread would be nice too.
No, for sure. This is January 27th here. So you're looking at the same 140, 145s. Look at their open interest and volume. You know they're getting bought up. Look at the put side. I see some 115s. You know, they're still there, 110 puts. But this is based on breaking the resistance. So if we break that resistance, if a stretch is maybe, the January 27th, that's like the last result. You can probably get like a 160 for $50. So if we break that, get that for $50, see it run up to 140, that 50 can turn easily to $300, $250. You know what I mean? So you guys know, y'all know how Tesla move with that volatility. The volatility is crazy. Tesla is a strong stock. And they've been putting out crazy articles saying, they're lowering the prices of their cars. So Tesla may be one of the ones. And they still was voted in 2022 one of the best companies to work for, no matter what. These are the things you got to look at as being a long-term investor. Now, that's more of the fundamental side. When you look at these companies, don't worry about what people think of Tesla. Dig deep into what they're doing. You know what I mean? Nothing about their sales went down. Nothing about their revenue went down. Their deliveries went down, right? And now they're saying they're lowering the price of the vehicles. Think about that. Is that going to hinder or help the stock? So,
hey, I drove a Neo for the first time, man.
How you like it, man?
It's too much for me.
But it was you and remember the Miss Woman of God? She was talking about Neo. Oh no, not Neo. She was talking about Lucid. How's the Neo car? That's the Chinese version, ain't it? Let's roll over right to Neo.
Yeah, it's too much for me, man. But it was just my first time, like really seeing one.
Yeah.
Cause I see Teslas all day, every day. I could go rent a Tesla.
Yeah, my homeboy, his wife got 2 of them. Now, he just bought his wife the SUV, and he got the smaller one. So they love it. Right. Yeah, they love it.
I don't know, man. That Neo, man, it ain't nothing over here, but they like it over there, man.
Nah,
and like in Dubai, UAE, they like that Neo too.
For sure.
What's the quality by?
Yeah, what the quality of the car feel like? Because Chinese product can be, we know.
A little cheap or
man, I think of it like like you seen that BMW, that hybrid BMW, it's like the small one. It look like it's like a Corvette body, but it feel like a 4-cylinder electric car.
Okay. I mean, I don't know. I'm gonna stick with Tesla. If you ain't first, you last. So Tesla, baby. But Neo chart does look good. 4-hour chart, we did bounce off the 981, which was the 65-day moving average back then. Or the 9-day moving average, sorry about that, back in the beginning of the year. This is the 3rd of January. And then from there, we had a huge continuation, a small drop down. Usually I tell people all the time, if you're trading options, this is where you're supposedly buying a stock using charts. It was on the retest of the support. So once it spiked up to, $10.86. You're supposed to buy it around $10, $9.96 or below, right? That same support area of the 9-day moving average, 981. And then it reversed back up and had a huge breakout. 9-day, crossing the 65, and now we're approaching the 200-day moving average now on a 4-hour. I have to lock in the quadrant line to see that next level, but it should be around between $12 and $12.54. It should be that next level for NEO if we have a huge continuation. Now, China is reopening, right? Is that something that's going on this week or next week? It's coming up soon. But all Chinese stocks been performing well since November. So, this is something huge to keep an eye out on. Target price overall is about $14. But for now, you could probably get you a $12 call, $12.50 call around $11.54, if it comes down just a little bit. Let's go down to the 15. Yeah, probably what's up?
Go ahead.
If it does break down, we should be looking around 1165, 1155 for an entry and getting a $12 call for the retest towards 1181. That's if it does break down. I don't know. But if we break above, we already know we can do the same thing. Their contract's not that expensive. We can look at the option chain real quick. Earnings day for them is away in March. We got plenty of time for them. But they may get a little energy because Tesla on the 25th. So they may get a little piggyback. Some of these stocks move together just because they're EV. So we may get a little piggyback move off of Tesla depending on what happens. But I think, Tesla may surprise us for a recovery. I'm not saying the $30 is out the window, but I think, we may have a huge move before we go down to 30. I don't know.
There was a lot of flow May 19, $15 straight.
May.
A lot. Yeah, I don't know why. It's just they were buying up the May 19, $15 straight.
Okay, let me see real quick. So here go to May 15. Yeah, we had high value on that one, and the $20 for May, and the $20.
That means something coming with NEO. I don't know what it is, but they've been buying it up.
That's gonna be a lot of time too. That's buying yourself a whole bunch of time. If the earnings is in March, you're right past your earnings date and all. So if it runs up to $15 way before May, and then March kick around and it start going towards 20, you're deep off in the money. And their contracts are super cheap. They got $100 for a $15 call, $20 call, 36 cents. And I'm not saying jump out there and do it. What I'm saying is you can plan for it. And you could probably trade that same option over and over and over again whenever it drops down or bounce up. But as long as that 4-hour look bullish, we may have a strong move. So let's go back to the chart real quick. Of course, we have to wait for that confirmation above. Let's go to the weekly. We have to wait for that. The weekly chart, I got the 65 at $20. So boom. That's why that $20 call is probably, going crazy. The 65-day moving average is at 1967. But we really have to break above that $13 area all the way up to about 14. 14 been a hard resistance for them. But a great support back over in, that was May of last year. Know what I mean? So yeah, that's the same 15 from 2020. July, once it broke over that, it had a huge run. So I'm not saying it's going to do it again. Respect that downtrend on the weekly, but pay attention to that 200-day moving average and that 65. That's at, $20 there. And you talk about May, $20 call, 36 cents, or 15 at $100. That's super cheap, super reasonable, and we're super early. You know what I mean? Super early. So confirmation for a huge breakout above 14. Everybody agree with that? Do anybody? Come on now, talk to me. What we on? We're gonna have to wake up one day. What we on?
Like that.
What's up, bro?
That one NEO one of mine too.
No, for sure. NEO is definitely looking good. Listen, 1-day chart, multiple double bottoms at that $9 area, since November. Had a huge gap up run back on November 30th, hit that resistance at 13 and some change. Boom, broke that down to that 9. Beginning of this year. And now we're going to look like we're going to retest it. So it's definitely looking good. It's looking good, like it's about to do something. Since we're talking about EV, let's go to Revyon real quick. Because this is what I added to the list just because I seen Revyon looking like this on the 4-hour chart. We had a huge reversal sign coming in at 1613. My target is $17.22. Know what I mean? That'll be half to get above 1667, of course. But I think we're gonna have a huge reversal run up with Tesla. And this is one of the ones that's on a huge discount. A lot of people ask me about this. And another reason why I picked this one out too, because right here, this is the new yearly lows on TD Ameritrade and the volume. Look at the volume for them. Their RSI is at 28.76, right? Their volume is at 42 million. Know what I mean? So, comparing, what TD got going on, going back to what I'm doing on Yahoo Finance, their average volume ain't nothing but 16 million. So they're definitely doubling up in volume. So people are in there. People are buying up stuff. Let's go look at their option. Hold on real quick. Earnings the 28th of February. Look at March. March, $20 calls, 38,000 open interest. So people are interested. They're buying. The $40 call, 21,000. I don't know if it's gonna go to 40. This year I want to play things closer to the money. So $20, $17.50, not $17.50, but $20, a little bit safer. You're going all the way to March, and they're a little bit cheaper. They're $112. Know what I mean? So boom. Let's break that down for this week. Thinking about Tesla. $20 call is for January 27, ain't nothing but 15 cents. They got 11,000 open interest also. Tesla got earnings on the 25th, right? So people may be trying to pick up on some steam right before Tesla moves, and then, just trying to capitalize off of most of the EV stuff. Know what I mean? And those are the biggest dates so far. I don't really see too many other ones. I see the $18 call for February 3rd. Looking like it's starting to pick up its volume and open interest, 62 cents. But let's see how it goes. I mean, these three are EV stock companies that have been beat down, but been talked about a lot. You know what I mean? So let's see how it goes. Real quick with Lucid, just to see if their volume picking up, their volume pretty high also. Same thing with Lucid. You know what I mean? We're way down to the $8 area. Had consolidation, broke above consolidation at $7, ran up to about $8.25. Looking like we're going to go retest it coming up on the 4-hour this week. We may be at $9 before you know it. That's a 200-day moving average. So it look like all the EVs are setting up to do something. And that's why I'm saying, like, Tesla may carry the whole load for the EV sector coming up soon. So keep that in mind. Apple, AMC, Neo, Disney. Listen, Disney is a great stock. It's a great business. It's been around forever, safe business, and we've seen it get beat down this year. A couple things with them. Overall downtrend did break after we had that consolidation around $84. We pointed it out at $86. We talked about Disney at $86. Now, I mean, we're at $99 right now. So this is why charting to me is very important. You can actually see price action. You can actually see the move, right? Boom. Here go the 1 week chart. Yeah, I gotta, Yahoo Finance be tripping sometime, but it did break the downtrend. Looking like we may be targeting 115, 118. And I know people's probably scratching their head like, how? How's this even possible? How is Disney going to get back to 115? Because it's already reversed. We got a reversal candle here. We had a bottom support at 84, and we got 2 bullish candles breaking above the 9-day moving average. This is the 1 week chart. 65-day usually be the resistance. This is why I'm trading moving averages. That's sitting at 116.96. So that's my target. My resistance level on the 1 week is 116. So that's going to be the 115 call, and more likely I'll be leading that into their earnings. Same thing over and over. I've been doing the same strategy for 3 years, and nobody can say it don't work. It worked perfectly every time. February 8th is their earnings. Let's go look at their options. We go midway, mid contracts. So those are the most volatile contracts. Is usually in the middle, the second week expirations of each month. So this is why you always use February 17th, March 16th, 19th, or whatever, because it's the most volatile time. So you see the $100 calls is $455, 14,000 open interest. So people expect it to make a nice move. Let's go to the 115, $60 for the 115. They're 5,000 open, 5,000 open interest, and the 110 got 8,000 open interest. Still, no matter how we feel, and maybe I may be wrong by the chart, we have to chart it out accordingly to have our target prices and how we enter. So to do that, we use the 4-hour chart and the 15. We see the 65-day moving averages breaking, crossing above the 200. We see a reversal candle bouncing off the 9-day. I think we're going to take off. Confirmation is above the $100.64. That's the resistance. Anybody?
Hey, can I ask a question?
What's up?
Can you go over what it means when the moving averages cross?
When a smaller moving averages crosses above a bigger moving average, that's called a golden cross. They call it a golden cross. When the opposite is the death cross. That's when a bigger moving average crosses over a lower moving average. You know what I mean? So that's why we use, these golden cross setups. For example, you go to 9-day crossing the 65. This is why it's very important to understand moving averages. And this is why this year I'm kind of tackling that. It's right here. Boom. That was your first golden cross on Disney, right? And you can put that line there, right? Let me do this real quick. And then boom. Put that line there. It broke at 88.42. That's when the golden cross happened. Look what happened since then. Full breakout. If you missed that golden cross, you can pull it over here and you can point it out here. This is the 9-day crossing the 200-day. So if you didn't buy in at 88, you could have bought in at 92. And then that took off. So that's why we're using the moving average crossing and different indicators. These are simple indicators. These are literally the starter pack indicators. Maybe the 965 and the 200 may be different from what other people use. I only use those 3. But you can use the 21 and anything that you think is, can get you more closer to getting, that cheaper price. But yeah, this is why moving average is important. These are golden cross setups. These are 9 days crossing the 65, a 9-day crossing the 200. And now we're right here. We got the 65 crossing the 200. So I'm expecting what? A bigger move above $100.64. Anybody?
What's the entry on that?
The way it's looking now, I think it's going to probably gap up tomorrow. If we again, because of it's being bullish already, I'm expecting gap ups tomorrow. RSI is at 70. The market it has huge earnings coming up this week. Well, not tomorrow, sorry, Tuesday, because tomorrow holiday. We got huge earnings coming up in the next 2 weeks. I'm expecting, either Tuesday or hopefully it don't, but I'm telling you, more likely it probably will gap up. Because the way it closed, the market closed pretty strong on Friday. And it didn't seem like it was going to, but it actually did. So I'm expecting some type of, gap up or something, because looking at the 1 day, go over to the 1 day real quick. It's a small gap on the 1 day here. So hold up, let's reverse. 66 RSI. I don't know if that gap gonna be filled. So let's just put your alert for 96.53. Put that alert in, because that's the daily. This is the daily chart. And then, boom, go back to the 4-hour real quick. The 4-hour look like we're going to take off, though, because we're literally right there. And this is a huge reversal candle. So put your other alert at the same $100.60. Know what I mean? 160. So if we break above 160, see that bullish candle above on the 15 or whatever, we should be able to get in there or be able to, wait for a reversal or, something. Something should happen either at that resistance or below the 9-day moving average. So something should happen. But that gap in the 1 day, it's 50-50 only if that's going to get filled now. If that get filled, that's going to be your entry at 96. So set both. Set both. But it's definitely looking bullish. Right? Definitely looking bullish.
You said 68.
Hold on, go back to the 1 day. Hold on. 96.50.
96.
Right. And then 165. $100.65. And that's a small gap. I'm gonna put a box on that gap real quick. Because of course it can reverse, but I really think that we're gonna gap up on Wednesday. Because that close on Friday was super strong. Super strong close on Friday. Anybody else? CrowdStrike. Trying to speed this along because I'm about halfway. I still got some more to go, guys. 5:41 on the time. We still straight. CrowdStrike. And finding things on discount is very, very much the idea, guys. It's so easy to hop in the stocks when they're already running, but it feels a little bit better when you're first. You know what I mean? So this is why we, definitely come in here on Sundays, talk about some of these moves, talk about some of these trades, and see where these things are going at. We're looking for a break above $100.19, and then target be 113 on the 4 hour. That's ideally, right? But we still got the consolidation here. Accumulation zone right there, right? So boom, more than likely we can come up to the zone at 101 and not break it, and we can come back down to the 9-day moving average at 98. But ultimately, we want to break above that 105 or within that zone area. So pay attention. 105 call above 100. Not to be super tight with it, but we have to try to play these a little bit close to the money. The earnings is in March. Same thing. Look at some of these March contracts. You start to see the 130s starting to pick up volume, the 115s, the 100s. I mean, you're going to pay a little bit more money for those. But, let's see how the movement goes. We have to have them confirmations. So we can wait for a break over, or you can break it. It can break back down to support area at the bottom of like $93. But since this was a small window of consolidation, we may come down to as low as like 98 before we reverse back up. So it's tight. This is a tight area. We only at 99.40. So play this accordingly. Don't go super aggressive unless you know. But if target is 118 and the 115 contracts are looking good for March, and you believe that we're going to have a nice move, go for it and sell it before the earnings. Uber. Uber. So we talked about the list in the beginning of the year. Uber was on that list. And then, if the Uber's your chart, if that's your stock, you need to stay on top of that because Uber made a huge move. From the time we posted it to now, Uber made an incredible move, guys. We posted it. The price of Uber was at $26. And then boom, we already at $29.37 now. I mean, it's only been 2 weeks. And $3 seems like it's not much, but that $30 call, I guarantee, is looking good. Let's go look at their contract. It looked like they are bullish though. They're definitely bullish. It's definitely looking like we're gonna be running up to that 32. That's my target, $32. At least 30. Yeah, let's do 31. Between 31 and 32. That's the quadrant line. That's the resistance from back in double top. That was a double top in August and September. And then it broke down to 24. So that should be our target where the double top was. So that's around 32. Earnings is coming up February 7th. God dog it. Earnings is coming up on February 7th through the 13th. I think that second week is going into February. Let's go look at some of those contracts going to mid-February. Same contracts, nothing changed. $35 calls is looking crazy. $32.50 is looking crazy, but $30 call should be the one you go for. Closer to the money, it's cheaper. It's $186, not that expensive. And it got the most open interest. Look like it's picking up heavy. So to be safe, I will go with the $30 call, February 17th, and let Uber do what Uber do. Now, I mean, see how earnings come up. We may have a nice run, but it's definitely bullish on the 1 week. it's definitely looking like we're going to start making that high. Again, this information was put out around $26 beginning of the year. Know what I mean? So please, let's continue to work. Let's continue to push, guys. Know what I mean? We have some great information being put out early. And then we starting to see nice moves from off of these bottoms. So let's pay attention. Plug, man, was notified at $12, guys. Is at $16.43. Incredible move from out of Plug. All of them is really moving well also. Plug, Charge Point, even Fuel Cell, even the baby, right? But yes, this definitely, a nice setup for Plug. Plug was put out to us super early. My target is $18. My confirmation breakover is $18.64. And then once we get about $18.64, we can more than likely do $20 calls up to 21. But your entry area, since the RSI is super high, we should be looking at that 200-day moving average again, which is around $15, between $15 and $14.44. So please pay attention to that downside because of the RSI sitting so high on the 4-hour that we should be having a nice retest to that support area, which is sitting at the 200-day moving average. Confirmation of downside is the 9-day break below the 1631. We should be able to see that $14, $15 area again, giving us a nice little discount to pull off a $20 call for the retest towards 18. Again, information about Plug been put out a lot. Change Up is killing it. That's his stock. You feel me? I'm just, piggybacking off of it. His notes, I think, is nice. Look, I'm sure I'm looking at it right now. That man got the same exact thing. So, boom. There you go. You know what I mean? Like, literally, you got the same, and he got the puts in there. So if you guys,
same exact thing, yeah.
Same exact thing. So you know what I mean? That's me blindly looking. The reason I show you that, I just look at, I'm not ignoring what he's putting out. I'm just making sure I see what I see, and then I see that he see what I see. And now we're just confirming amongst each other. You feel me? That's how it should work. We should be able to work on our charts on our own, work on our information on our own, get confirmation from people that's been in it, that's been trading it, and then boom, we all make money together. At this point, we can't lose. Know what I mean? We got more eyes than one. We got more people pulling up information, and there's a lot of us in here. So we should be able to kill every trade. We should not have no issues with making money on trades when we got this many people in here working. All right, DWAC. Also look extremely bullish. There's that resistance right now, RSI at 79. Wait, do not jump into DWAC off rip. We know it's Donald Trump stuff. We know elections is coming up. This is going to be a super popular stock in 2024 because of the election. But election is going to start running around, end of this year? They're going to start doing these ads. You're going to start seeing tours, blase, blase. There's been beat down, from the beginning. It popped up at 94, came down to the 9-day moving average at 43, popped right back up to the 94, 97, giving us a double top on the weekly. And then from there, we already know what double tops signify. Downside. You feel what I'm saying? We had a huge downside run. Once we broke below that support at the 9-day moving average at $43, we had some downside, came down to the bottom of 15. Now, we're still early on this. So basically what you're waiting on is a confirmation break over the 1845, and then your targeting going to be, I see it sounds crazy. I'm not going to say it because it sounds so crazy. But if I go by my moving averages on the weekly, my target should be $39. And this is using moving average. Usually, with this type of charting and look kind of gapped up, I'll just use my quadrant lines because I feel more safer. But confirmation for that 40, you'll get it over 31. Mind you, we only at 18 right now. Mid area support is 23.16. Bottom support is 15.95, and resistance from there is $19. So we're literally right there. It's either we break over the 19 and we run up to the 23, or we fight that resistance at 19 and break back down to the 15. So that's what I'm saying. Patience in this trade is going to carry a long way. We know it's popular. We know that they're going to be doing this for election. We know the information that's put out. We know that we're breaking over the 200 slightly right now on the 4-hour. But because of the RSI is at 81, There's no reason to jump off of the porch and go for it head first. Wait for your entry at 17 or below, 1730 or below, guys. Patience is going to get you there this year. It's not going to be a rush game. I don't have to run to nothing. I'm going to set my alert and I'm going to let it do what it do. You feel what I'm saying? I'm going to trust it. Trust the process. If your alert don't go off, that means your price ain't hit yet. Basic, right? Simple stuff. Let's not complicate this at all. I live by my alerts. My alerts go off. I go straight to the chart. I'm chilling. I'm confident when I get in, confident when I get out. I don't think about it. Boom. So yeah. Anybody got questions? And this is a SPAC. This is the Donald Trump website. This has been, talked about, hyped up, whatever. So I'm not super about to say this is the best thing to buy. I'm using straight technical analysis. Wait for them confirmations. Don't get aggressive until you see a price that you reasonably can get into and make some money. Don't jump into it at 18 knowing the RSI on the 4 hours high. Stick to your discipline, stick to your plan. You don't have to be extra. Delta Airlines. Whew, I feel like so long ago we talked about this, airlines and how Boeing was going to show up and how all these reversal signs. This is why I use technical analysis. Look what happened when we got right to my resistance. My resistance, $39. I said trade Delta to $39. That's all I wanted to do. That information was put out 2 weeks ago, probably. I wasn't trying to be special. I'm just going by what people are looking at, right? I'm trusting my moving averages. I'm trusting my charting. So if I say, boom, we're going to 39, probably we're going to make it to 39. That's why you buy options in the middle of the week with time, so you can be able to, take advantage of that short-term trade. But the Delta information was definitely put out super early. Definitely have a lot of potential still once we break above this $39 resistance. And with Boeing, where they're setting up, it's like we're going to have a continuation out of the airlines. Let's go to the 1 week. Here go the 1 week chart, and it looked just like Boeing's. It looked literally just like Boeing's chart. So it's crazy. Boom. Yep, that's your resistance. Looking at the next target above 39 will be 44.47. Ultimate target to break over is that $50 area. You feel what I'm saying? Ultimate target, $50. But for right now, we see the little resistance popped up. We see it's fighting that resistance at 39. Let it cool off. Let things kind of, simmer down. And then look for the retest. What's up? Okay. Yeah, and just look for the retest. You feel what I'm saying? We see the support area at 37. Look for that break above the 9-day moving average at 38, and then trade a 40. It's tight, but you can trade that retest. You haven't really retested on the 4 hour. We can look for that retest before we make a decision if we want to continue up or continue down. Or don't play the retest at all and just wait for it to break above 40, or go back up to 40 and trade the put back down to 35. You know what I mean? Because that's going to present a double top scenario. We're going to see some downside. But reminder, this information was put out early. You know what I mean? $30, $35. Like, this was definitely put out super early. So nothing to see here, guys. Patience. This is wait for your time. This week is definitely going to be a nice, let the day start off. You don't have to wake up the first day of trading and be like, I'm gonna trade. I know it feels good. I know you got the money to do so. I know the plan look like it's gonna work, but wait for your confirmations. When we talk about charting, and real quick, there's always gonna be, if you see an aggressive move up, there's gonna be aggressive move down, call a pullback. Wait for that pullback support to hold before you jump into a trade, and then get back into that retest. Know what I mean? So same thing. Don't feel like, oh, I missed out on the trade when you see a big spike. This is the perfect example. I just deleted all my charting for SPY. This is how SPY was looking, a couple weeks ago. We talked about that long consolidation, and I use SPY as the example of most of all of my charting. But we talked about that little consolidation here, right there. And I'm gonna show you guys. Notice this retest of the support, right? Boom, right there, right? So when you, and this was all in the notes from last week, and there's a lot of people made money off the notes because it was literally telling you exactly what to do. Now I mean, consolidation here, long consolidation, right? Let me shape this up a little bit more. Long consolidation here. Then from there, we see the retest, right? We broke above resistance, seen the retest. We broke above resistance, seen the high target. Then we seen the retest of the support. This is your entry area. When you're doing charting, be patient enough to trust it. That's your entry. This is exactly what I told you guys to buy that last week, almost the exact spot. So one person came out and said, do I buy it at 387? I said, yes. Or you can buy it over 391. And look what happened. We had a full breakout going straight towards 398. You know what I mean? This is why I put all my money on charting every time, no matter what, because I can understand and see exactly what I want to do. If this retest didn't happen and it failed and it started breaking back down to that support area, okay, cool. The confirmation is the 65-day moving average below. And then you would have got some downside off of the 65-day moving average. But since we broke above the resistance, retested that old resistance, new support rule that we always been using, we're getting a huge move here, and more than likely we have a huge continuation towards my target up here this week, guys. Okay? If we fail here, it's okay. Let it come down or get you a put or do whatever you want to do. Know what I mean? But the patience is going to get you there. Wait for your confirmation below the 9-day moving average. Wait for your confirmation below the 9-day moving average, which is 396.53. Okay? It seemed like it's a lot. It seemed like charting is difficult, but it's literally sticking to the rules and just playing it by your rules. The rules is not going to make it all the times. Your rules may, it may not work. It may go to the retest and then reverse on you. That's why a stop loss is very important. Your stop loss should be the 65-day moving average. That's your stop loss area. Right here on your 65. 384. Stop loss. So now I'm in position. If I lose a couple dollars, cool. But I'm not getting out early enough to where I missed the reversal. You feel me? But I do have a stop loss in place just in case. What's up?
My bad. How do you know what the price of the contract will be at that number of spot at that 65-day moving average? You know what I mean? When you go set your stop loss.
Well, the stop loss is in place for it just in case you don't want to lose as much money. The reason
I know.
Okay,
what I'm saying is, how do you know?
I don't know.
I don't know. For the price of the contract, not the price of the stock.
Listen, if you set your stop loss, the average, when we first started, you set your stop loss at 10 to 15% loss. That wasn't working because it'll come down to 30%. Your stop loss kicked in, you're out 30%, and it reverses back up. Now I'm out to play totally without no type of thing. I believe the 65-day moving average, if I'm going to check again, it usually be like 30%, like 30, 45%. And it seemed like, oh man, I'm dying off of that. But it's also give you an entry to get into it because you're breaking below the 65. So now I can get a put. I can get out my stop loss, turn around, grab a put real quick. I'm going to make up a little bit more than I lost. You feel what I'm saying? You really want to kind of keep that back in your mind. Usually it's around, 25, 30%, honestly. That 65 kind of give you that little window. And another thing that we've been doing was buying time. You know what I mean? So that's why you buy time. So, let's see how it goes. Let's see how I go. I got to check again exactly, but every one is going to be different. I'm just telling you, don't have your stop loss so tight to where it hits your stop loss, kick you out, and then it reverses. And then you're like, damn, I shouldn't have my stop loss so tight. I'm trying to give you a stop loss at a cushion. You feel what I'm saying? So just in case this was a great sign of a reversal. You're right here. You got a bullish engulfing instantly. And then you just, boom, you go take off. You know what I mean? So this trade was solid. You feel me? As long as you stuck to the retest rule and when it came down and buy in at 386 to 387, you were solid regardless. Now, I mean, my alert went off at 386. It didn't matter. You know what I mean? It really didn't, I just put the stop loss in just because, I want to teach people safety. I don't want to, It's like riding a bike. You can wear your helmet sometimes, and sometimes you can't. Like one of those things.
You know what I'm saying though?
No, I understand exactly what you're saying. Like, how do you know the percentage you're losing if it breaks? If you get in at 387 and they come down to your stop loss at 385, how much you think you're going to be losing at that point? It's probably going to be like 30%. But if again, it didn't matter. That was hypothetical because the trade worked. You know what I'm saying? I'm just telling you how to put your stop loss in. You know what I mean? Literally, the trade worked, so it didn't matter if it was. You know what I mean? This is one of those things. I mean, I just don't want you to jump into something and be like, man, my stop loss kicked me out, and now it's reversing. I'm about to, go crazy. I just,
Yeah,
if
that's one thing I'm scared of, a stop loss.
Right.
Get it too tight.
Exactly. If you put your stop loss at least 25 to 30, I know it seems like, oh man, I'm losing 30%, of every 100, I'm losing $30. I know it. But we can make that up. You feel me? We can't make up 70%, 100%, or 85%. We can't make that up. You lost by that at that point. We can make up 30%. Yeah. These trades can go for 100% in minutes. So it's like, I'd rather lose the 30% than lose a 70% when I had an opportunity to get in and make more money on the downside regardless. You know what I mean? I just want to make people know, like, look, I use stop loss. I'm not crazy. You know what I mean? I don't just wake up and be like, no to stop loss. We're just floating. I'm just telling you where to put it in at so you won't get caught slipping. You know what I mean?
Yeah, no doubt.
It was probably shorter than that because literally that message went out to buy in at 386. Man, look, you can read the note, man. The note was so precise. I mean, I couldn't make it up myself. But I did write it though. Does that make me feel a little bit better? It said, looking to break over to 391.21, watching for the bottom entry at 386.26 for a 390 call for 113. We came down to 386.29. And then the lower level, that's the 4-hour chart, but the lowest wicks is 385.85. So think about it. If I'm telling you the entry is, and these are 4-hour charts, if I'm telling you the entry is 386.26, and we came down to 385.85, and you had your stop loss at 385.85, and not at the 200-day moving average, which is around just the small amount of cents, bro, like 385 even, well, you've been kicking yourself. Because that's literally that's less than 30%, actually. That's probably like 15 at that point, 10 to 15%. You feel what I'm saying? That's precision. You know what I mean? And these candles closed literally at, right there, dude. Like, it's crazy. What's up? So this is my setup. I'm gonna tell you exactly how to set up your charts if you're charting the way I chart. You can chart the way you want to. I'm gonna tell you exactly. I start off, and this year is the first year I'm introducing moving averages. Last year I used quadrant lines. So I'm not switching what I do. I'm just teaching different ways. You know what I'm saying? So I start off with the weekly. Off rip. Start off with the weekly. This is so simple, and I showed this so many times. It's so funny because it actually works. I start with the weekly. The red line represents the 200-day moving average. The blue line represents the 9-day moving average, and the green line is the 65-day moving average. Right. The first thing we always got to do, and we always talk about this, respect the trend. We know the downtrend the market is still in a downtrend. Period. There's no around that. There's no way to hide it. We know overall we're in a downtrend. Until this downtrend on the weekly break, this is the go-to. This is what we do. My skill set told me that we get a mid trend break. So when I set my charts up for that one, I figured out this mid trend break, and these two candles here are signs of reversal. Even though they're red, these are reversal candles on a bullish move. And since it's a mid-tier break, that's what I was trading off of last week, right? So boom, let's delete that. But this is the strategy. And that's, what I just showed you with the trend lines and the mid trends and all that stuff, that's not even advanced. That's really like standard. You should look for trends. You got to find the trend, period. Boom. Red line, go down to the blue line on the weekly. Boom, blue line, go down to the green line on the weekly. green line. Now these represents hard supports and resistances using the moving averages, right? Then you go down to the 4 hour, and this is I love this strategy because it's so simple, and no one really showed me how to do this. I wish somebody woke up and was like, "I got a strategy for you," but look, either way, I'm in the house for too much, and I'll be studying. So boom, blue line, do the same exact thing on the 4 hour, right? Blue line and the green and the red is damn near touching each other. So you can either put it there or you don't have to put it there, but whatever. I'm gonna just try to fit it in there where I can, right? And then boom, from there, I'm trading off the 15. That's it. I'm trading off the 15. In hindsight, you can add in the lines on the 15 as a good support area, but I'm trading off the 15. My entry is look where my moving average is now from the 4 hour to the 15. 396, 60. You know what I mean? It's the same number that we wanted as an entry. So here are your 396. You feel what I'm saying? Here are your high resistance, 402. Here go your 200-day moving average bottom was like 393. This was just on the 13th when it dropped down in pre-market and then reversed back up again, bounced off the 200-day moving average. So the story don't really change using a different time frame to trade it in. So if you do see price action, you move and you do the same thing as using the price action on the big time frames as you do on the smaller time frames. If we break above the 65 golden cross here, we're going to get a bigger move. If we bounce off the 200 and not break below the 200-day moving average, we're going to get another reversal. If the 9-day moving averages stay above the 200-day moving average, we're going to get a reversal. The basis of using the moving averages for price action to stay above the moving average. You need price action, which means all these candles has to stay above the moving average. It has to ride out the moving average. Once price action breaks below the moving average, more than likely you're going to get downside to the next moving average. There's a high chance. Here go example. Price action broke below the moving average here. We came below the 65. Reversed, and we start riding the 65 until we broke above the 9 again. Price action came here, broke below the 9-day in the 65. We went directly straight to the 200-day moving average. Once we broke above the 9 again, what happened? We rode on the 9-day moving average. So it seems tedious, but it's the same concept. You feel what I'm saying? I use the 4 and the weekly as big side confirmation for a bigger move. So whenever price action is going to break above, this mid-tier 396, notice that we did run up to $98 multiple times. If it comes down to that, if it breaks down to the weekly, I don't see how far I can zoom out, but if it breaks down to the 200-day, let me go to the 4 hour again because it's kind of easier to read it. So this one did not touch the weekly moving average. It just consolidated. Once you know the consolidation, that now you adding in the rest of the things and the things that we learned. Nothing changes with the support and resistances. Now you're just noticing the consolidation. So I believe every time I trade a consolidation, it gives me direction once it breaks out. And you can look at 1,000 different traders. Everyone's doing the same thing. I taught everybody in our group last year in March about consolidation, then breakout. So you can catch that consolidation on the 4. That's just recognizing that the stock price is going between 2 areas. Don't trade nothing until the consolidation breaks. That's when you get that next move. So it didn't come down to the 200-day. It just started consolidating, breaking above the 9-day, breaking below the 9-day, breaking above the 9-day, boom, 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 until that 9-day crosses the 65. And then we got a huge move. You know what I mean? So it's the same, it's the same jest, but it's just a different way of viewing it. You know what I mean? And that's what I've been, this year I've been using the moving averages. I know it seems like a lot, but for people that have been studying charts, you guys should be used to the lingo and how things look. It should be simple to figure out. It should be really simple to figure out. What's up? Yeah.
Why the 65-day moving average? I'm interested to know why 65.
I used to use the 21 and the 9 and the 50 and the 200, But I ain't gonna lie, the 65 been giving me a little bit more of a confirmation for a continuation. That's why I use the 65. The 50, it does too, but I feel like the 65 a little bit more closer. I used to have a lot of moving averages, but I also follow Wall Street, not Wall Street Trapper, but Einstein of Wall Street. He trades every day. And he says his chart guy, which is one of probably the best charters in the world, because he does this for the last 50 years, uses the 60. He actually used more than what I got up here. He used the 31. He used a whole bunch of them. I figured out I just need a 65, the 9, and the 200. You know what I mean? But Einstein of Wall Street, yeah, for sure. But listen, I'm not gonna lie. I can trade using the 21 and the 35. I can trade on it. Don't matter because the concept is still the same. It's just about that confirmation. Sometimes they all do the same things about how you want to trade. You feel what I'm saying? Like what fits your criteria. Now I mean, like I could use whatever, but I've been using this one recently and it's been pretty accurate. I'm not even gonna lie, it's been super accurate. Every time we break above the 9-day moving average and crosses the 65, we get a nice move. You feel what I'm saying? And this is SPY example. That it goes on for every stock. It don't matter. I mean, it works. And if you need to use another indicator, I use quadrant lines. Quadrant lines is almost the same thing, but it just gives me all the sections that I'm looking for. It's kind of like Fibonacci, but I get the mid resistance and all. So if I do a quadrant line on this downtrend here, boom, just like this, that's how my quadrants will look. You know what I mean? So if you look at this is on a weekly, it's a clear, retest at the 384. So, if I use quadrant line, I'm getting at 384 and just riding it out towards the same, about 410, 411, will be ideal. But since I'm using moving averages this year, I'm not using quadrant lines as much. You know what I mean? So.
Okay, Dave, I have a question.
What's
so since you said if it hits the 9-day, you get a nice move up.
Yeah.
How does it determine how much time you need on your contract?
What time frame are you watching? Are you watching the 4-hour? Are you watching the weekly? Are you watching the 15? Are you watching the 5?
I was watching the 15 because I'm a school teacher, so I can't be on the screen at all
No,
times.
I understand. So the 15 could be a swing, but it's more of a day trading time frame. The 4-hour is more of a swing. Yeah, you need a 4-hour or a daily or the weekly. Just use the 4-hour. Just use the 4-hour. The 4-hour is to me is the best time frame in my opinion. You can use the 1 hour, but the 4-hour to me, I love the 4-hour time frame. I love it. It's such a simple thing to understand and read. A lot of these shorter time frames can get a little bit confusing because all the movement, but that 4-hour is clear cut, especially if you see what you want. Now, this is what I mean by see what you want. So if I was to chart all of this, and we caught every run from this, I hope everybody know that we caught every SPY run. We caught this one in October. I mean, that trend line, short-term trend lines can be found on the 4-hour. This is why I like the 4-hour, because you can do short-term trends, you can do long-term trends, but this is a short-term trend channel, right? We caught this trade back in October. I was yelling about October recovery the whole month of September after we made the trade from June to August. So I was already preparing myself for October. Look what happened in October. Nice trend channel. As soon as the price action broke that trend line, look what happened. We had some downside, right? What happened from the downside? The end of the year is usually consolidation, man. The last 2 weeks of December, or almost the whole month of December, is usually consolidation. What we get? Consolidation, right? Beginning of the year, I told you I was usually starting out bullish, guys, and we had a full breakdown on why the first 5-6 days is going to look like it's bearish. It's going to trick us. And me and Lou talked about it. I'm like, dude, usually on the first couple of days, it's going to look like they're going to be bearish. But then the recovery ain't going to come to midweek because they're gearing up for bank earnings. Remember that conversation? When bank earnings came around, what happened? Whole market recovered. Whole market went crazy last week. That is why I'm telling you guys, I'm not trying to time the market, none of that. I'm using the same historical patterns that we've been noticing for the last few years and just redoing it over and over and over. Every year it's the same thing. It seems like it's not, because that's how they want you to feel. They want you to look for all these other indicators and all that stuff, but it's the same trends all the time. So I'm not going to be surprised if the last week of January it become bearish after earnings. I'm not going to be surprised. I'm just going to wait for the first of the month vibes for it to bounce back up again. That's
It
why.
actually is though.
Yeah, I know it is. I know that.
According to the almanac, which is based on historical data, like you said, it actually is towards the end of last week is bearish.
Yep.
According.
Yep. And how do we know this? We've been doing this for years and years at the time. I got the almanac now. I started buying the almanac because I felt like I became the almanac. I've been putting out this information for years. The same way every time. That's why I showed you on my historical data on Facebook. I'm trading the same stocks I did last year right now. Boeing, CAT, SPY. It's the same exact stuff over and over. But I'm telling you, we're human. And it's okay to be. We overthink processes. We literally overthink processes. This is our human mentality. But once you start reading about these big time traders and all these investors, dude, they all say the same thing. If you're a trader, keep a simple and stupid plan. Do not overcomplicate your plan. Because now you're going to talk yourself out of what you already planned. That's the truth. So that's why I stick to nothing but stock trading off the charts. Anything other than that, long-term investments, yes, we're looking at fundamentals. Yes, we can start breaking down their revenue every year. We can do all that information. But historical facts and charting is going to take you a long way. I put out Boeing calls last year, guys, and we all know that. Last year, October, I put out Boeing calls. Look at Boeing in October, 121, 119. We was here for that. I just do the same thing over and over. Double bottom. We already know September is historically bearish. Double bottom. Reversal in October. Continuation in the beginning of the year. It's the same thing over and over. So that's why, to me, in my opinion, you should never take a loss because you should be prepared with the same things over and over and not overthink this. We're too smart to overthink it. Anybody else got questions? And we can look at CAT. Everybody seen me put my CAT calls out all last year. That's not a secret. I've been hitting on CAT forever. Whole shares at 160. We're at 157. We're at 257. Downtrend channel, downtrend breakout. Same thing over and over. Every time it hit the bottom of the downtrend, look. Is this September, the bearish month of the year, hitting the bottom of the downtrend? What a coincidence. Is this a recovery in October? Is this coincidence that we go, look, October, is this the same bearish that's touching the downtrend in 2001 in September? Is this the same recovery in October? Is this the January, beginning of the year, touching the top of the trend line? Why is it the same? Why I can go back in history and pull out the same charts over and over. This is why you guys got to focus on, just focus and stop worrying about what everybody else is talking about. If you focus on your charting, it don't matter. None of that matter. The excess noise does not matter. You're going to be the best trader ever if you just focus on your charting and be confident when you do it. Anybody else? It's just coincidence that every downside that you see is either March to June, September, and December. When I told you guys the best time to buy stocks, May and June, September, and December. Those are the best time to buy stocks. How do I know this? Because that's what the money is doing. We follow the money, right? Look at the holders. This is my first time on this in forever. Why are they buying all these stocks on September? Because they're reporting all their stocks in September. That's not coincidence. They know when to buy. They're not dumb. Anybody else got questions?
Okay.
Y'all good. Okay, man. That's pretty much it for me, man. I really, tomorrow's a holiday. Happy Martin Luther King birthday. Y'all celebrate, enjoy yourselves. It's my daughter's birthday, so we're gonna go party it up. Tuesday, we back on live. We're gonna do it again, guys. If you got ideas or questions, feel free to ask. Free all 2023, because I feel like information should be free. It's all about how you value the information. Just let me know if you need me. I'm always here. I'll post charts. I'll do whatever you need me to do. Let's make this money. Stop playing. We locked in. God bless y'all.
Yeah.